Good morning, Tuesday, January 20th. Welcome back to Full Bore Silver. Well, silver hit 95.87 this morning, 6 a.m. Gold 47.98, 11 a.m. I texted Aaron Silver around 6:30 with that silver explosion. I think the guy had already been at work for 2 hours. He's an animal. But also of note, the U.S. 10-year Treasury yield gapped up to 4.31%. That is a huge red flag. And you should also be paying attention to the Japanese 40-year, 10-year, 20-year parabolic moves up. The 40-year was up 8% to 4.24. Now, Japan is the largest U.S. debt holder on Earth, 1.6 trillion. Their economy seems to be imploding. What happens when they run out of money and have to divest of $1.6 trillion in U.S. debt? This is an untenable situation. I don't know who's asleep at the wheel here, but somebody has to be paying attention to this. Now, we have big gap downs today, also in the NASDAQ SPY and the Dow Jones. Hey, Don Durrett told me that the SPY was correlated to gold and silver, so gold and silver should be going down as well. Sorry, Don, you got that one wrong. Silver and gold, all-time highs, rocketing. People are moving into hard assets, monetary assets that have been around for 6,000 years. It's the real deal. It's not the fake printed crap that the US government turns out. Now, a casual observer that I recently got into stacking asked me a really good question that some people have been asking. What happens if there is a big retracement with silver? Of course, technical analysis wise, we use it for the equities. I don't think it correlates as well with precious metals. We're in a paradigm shift where central banks, countries, retail, sovereign wealth funds are moving into hard assets, precious metals. The 50-day moving average on silver is 65 an ounce. Worst case scenario, you've seen in the past where silver will bounce off the 50-day. Now that's on the weekly or the monthly. I don't think we ever get there again in human history, but we could, but that is, again, the fake COMEX price. I don't think it's reflected in Shanghai, and premiums are going to be such that you'll never be able to buy silver again at 65 an ounce, in my estimation. But it is important to look at the worst case scenario. Now, Michael Oliver was on Capital Cosm yesterday. He's one of the OGs, and what he was doing was overlaying fractal patterns from silver in days gone past onto the chart patterns of what's going on right now, going back 35, 40 years. His prediction was before the end of Q2, silver is at least $200 an ounce and more likely $300 to $500 an ounce. If you take past chart history, we are only at the beginning of this parabolic move. Do not sell your physical silver is what I'm telling close friends and family. Not financial advice, but this is the asset. What are you going to roll into? US Treasuries, bonds, stocks at all-time highs? Pokemon cards? No, I don't think so. Silver is where you want to keep your wealth. It is a store of value, and the capital appreciation is incredible. What a gap up today on miners. Just unbelievable. Vizsla, Wheaton, Hecla, Barrick, Newmont, Agnico, all of them. Just what a morning. That was fantastic. Moving on. How did we get here? How did we get to this place in U.S. economic history? Well, I mean, this has been going on for years. You had the creation of the COMEX futures on gold in 1971, 1974 for silver futures. Look at the last administration's chair of Economic Council, Jared Bernstein. Now, what a guy. PhD in social welfare, Bachelor of Fine Arts. He's a musician. He plays the bass guitar, and I love a great bass drop and heavy metal songs, but There is about to be a base drop in the U.S. economy. The way that these treasury yields are going, overinflated stocks, outrageous price to earnings on most of the Mag 7. There was a famous interview with Jared Bernstein on Finding the Money where he was asked, first he said, the US can't go bankrupt because we can print our way out of any financial catastrophe. And the moderator of Finding the Money, and totally ironic title for the show, said, if we can print our way out of any catastrophe, why do we borrow money from Japan and China? To which Jared Bernstein said, it's very confusing, and he couldn't explain it. Now, this was Biden's chair of Economic Council. This is wild. And then you throw all of them in there, Bernanke, Janet Yellen, going way back. These people are clowns. I can explain it. It's a giant Ponzi scheme to launder and steal money from taxpayers and to leverage other countries. And it also inflates America's economic success, and it hides the impending financial catastrophe. Now look at M1 money supply. In 2020, it was $4 trillion. Today, it is $20 trillion. How did that 5x in 5 years? Is America that economically efficient? Do we actually manufacture anything? Is it Saddam Hussein's and Gaddafi's gold that we stole? Where did this money come from? It didn't just magically appear out of thin air. Did we create fake industries like healthcare insurance and AI and green energy industries that run on coal power? It's troubling if you look at the fundamentals. I mean, most people, they can name, all the football players on their favorite team and if the Oilers are playing the Packers, Scott Bessent's two favorite teams. But people are not paying attention to treasury yields. They're not running the fundamental metrics and financials on the Mag 7, the SPX, the NASDAQ. They're not paying attention to this. So good on you for tuning in and staying abreast of this, because I think we're in for a major paradigm shift. So we'll continue to monitor these markets. Silver looks like it's forming another falling wedge here on the 4-hour. We're set for our next leg higher. So we'll keep an eye on it, but have a fantastic day. Thanks for tuning in to Full Bore Silver. We'll talk to you soon. Like, subscribe, share. Have a great day.